Live?
Hello. We are.
Boom.
No, we are. Are
We
we?
are.
We are.
I don't know why you
Nice.
said.
Jesus.
Why do we stop? You said boom. I don't know.
Your eyes made us there a little we were a little concerned. But yeah, another Layer1Live. Nice
Another
little
one.
intro going there. We got tons of news. It's gonna be a good episode.
Yeah, good start.
Hot start. Hot start here, man. Hot start. Q drove about 7 hours today, Monday after a long weekend. So we're all kind of covering a little bit here, getting hit with a case of the Mondays, but we'll still bring it to you.
Yeah, absolutely. Yeah, it was a great weekend. Q was in town. Went to a lot of exciting places.
Served alcohol.
Yeah,
Part of the issue.
adult beverages.
Mm-hmm.
Crypto boomed and bust while we were there.
Yeah, hanging. BTC stablecoin right now. So
Yep.
Absolutely. I'm getting everything loaded up here, guys. So we've got. We're gonna hit you with some quick news. We'll hit you with some non-breaking, and then we'll go into the different networks. We got some scandals to talk about. We got Peter Schiff, Craig Wright. We got a little bit Grayscale. We've got Decentraland finally announcing public launch. We've got some EOS stuff, some ETH stuff. So we've got a lot of good news here today, man. I hope you guys enjoyed that musical intro that we updated for you.
We worked on it yesterday. Yeah, let us know what you think. Obviously, love that song. So we'll probably keep that one. We're always in need of $1, but not a ton of breaking news as of Monday. Just some news that came out over the last week. The first one here, Grayscale Investment, right? So basically the giant public Bitcoin trust that I would assume most people know good and well at this point, announced their 2019 investment amounts. So over 600 mil in US dollars came into their BTC trust with a total of almost 1.2 billion across all assets. So pretty significant there. Worst part about that news is that I had to click on a Forbes article, which is basically just a site full of pop-ups now. So yeah, shout out to Grayscale pushing, although with crazy premiums, still pushing Bitcoin forward.
Yeah, I absolutely. I just looked it up right before the podcast where, basically they have 2 billion under management, and they broke it down in the report of how, like, on average, what would be the investment in their Bitcoin trust, and it turned out to be close to 15 million a week in 2019.
Oof.
Goodness gracious. What's the average size? What did you just say there?
Well, 15 million per week is what they were getting for Bitcoin investment trust from their clients, and their overall clientele has grown a lot. In 2019, approximately 24%. And they're talking about how big of a growth it is compared to what it was, back in 2017 and previous years. So they're seeing a huge bump in interest, basically, for Bitcoin trust that they have, and more money's pouring in from existing clients that they have, as well as new clients that they're onboarding. So, do you want to talk about institutional investors?
No, this is a long start to the quick news section here.
I know. Sorry,
we gotta get rolling.
I feel passionate about this subject. Don't kill my passion.
Fair.
So moving right along. ETH breaks all-time high trading volume on Tuesday. So yeah, that's pretty big. If you've been watching Dimitri's desk, I'm going to start off by saying that. But yeah, basically, the volume picked up significantly for ETH compared to any time before. And my speculation could be that maybe for ETH 2.0 and all those things that are happening fundamentally for ETH. But overall, we saw ETH go from 143 to 172 fairly quickly with that solid volume. And as we always talk about, volume dictates price, so that's very good. We'll see how that's going to keep going. And then for BTC, so BTC volatility is going higher, as we've seen with the also increasing volumes. We've hit the volatility. We're hit that volatility point where it was last seen in November, and essentially that's pretty good because that attracts speculators and more traders in this product. So we've seen more interest in that sector. I think you looked up something about like Bitcoin searches the other day. That was interesting.
Yep.
That was up as well, right?
Yeah, the search trends, right? So, your traditional like where to buy Bitcoin, how to buy Bitcoin, Coinbase, all these things have pretty much a sharp tick up.
Yeah.
As we, hopefully move into a sustained bull market here in 2020, or at least a confirmed one.
Has anybody?
But yeah, BTC, I mean, crushing it, whether it's the Grayscale Investment Trust, like you said, ETH there breaking the all-time high for trading volume. That's huge too. So
Can you guys hear me?
Yeah,
we got you. Another piece of news here is that PAXG, so Paxos is a stable coin, pretty popular. It's about number 2 or number 3 right now, obviously behind Tether. They have basically a gold derivative called PAXG. They launched it a handful of months ago through their own platform, but it is now available in the form of futures trading on FTX. So for those of you who are, what we would kind of call store of value traders, I guess, if that's a category we would break it down into, not only can you trade BTC, the new digital gold, but now you can trade gold futures as well without obviously interacting with the traditional financial system.
Gives definitely more flexibility there.
Yep.
Perfect. I got Binance launching a conversion for their Binance USD that was, I believe, announced in September and then rolled out officially on the Paxos platform. And now it's live, obviously, on Binance through that Paxos partnership. But so I guess the beginning, I'm gonna read straight from the announcement here. The beginning stable coins that will be supported are Paxos, USD Coin, True USD, and then they also have Tether, although Tether's not going to be a straight 1-for-1. So that's something to keep in mind. But this just allows, conversions of those 4 stable coins on that 1-to-1 basis, get more volume for, Binance, and they've been working with Paxos, it seems like, for a little while now. So I think they're running a fiat on-ramp for Binance as well, and doing good things there. So that's what we got with the BUSD.
It'd be interesting to see if I know I talked about it last time, where how we're going to see certain pairs get delisted for Binance that are attached to certain stable coins. So if we'll see, and their thought behind it is basically, the volume is low when you have, let's say, USDC trading, against ETH or whatnot. The volume is low. That's why we delisted, and now the volumes maybe are up for BUSD, so therefore, I think there might be some pretty good shift there in terms of Mike is breaking stuff.
Yeah, this has been an interesting episode so far. We've had some of the weirdest intros that we've done, but I want to say hi to the guys in the chat right now. We've got Mr. Sheffield in the chat. We've got Rude Mud Crab. Good to see you chatting for the first time, Crab. We always like to see you in the Telegram chat. So I actually didn't touch on, for the people that are new to Layer1Live, also for the guys that have been here a long time, top 5 countries this week. We had USA, Canada made it to number 2, Australia, UK, and then Germany, as well as the top 3 episodes from this past week. We had our episode with Dapper, we had Wax, as well as IDEX. And then the upcoming guests, guys, are going to be V Systems. That's going to be released tomorrow. We've got Snowball on Thursday, Lolly on next Tuesday. And then we have Parody and Polkadot on Thursday. So, a ton of good guests that we have coming up. One disclaimer, to be had right in the beginning of the episode, guys, we talk about all this news to start off with, and then we hit, the different networks. So I'm going to have in the description, maybe, 2 hours after the episode is done being live, I'm going to have those timestamps for you so you can kind of go directly to whatever news you'd like to see. So that's what we got. It. Mike's ready, up and at him and ready to roll.
Mike is back.
Yeah, Mike is back. So this is a big piece of news, man. That's been this is very tabloidish. We got some Boomer Saga stuff going on here with Craig Wright. What's going on with Craig Wright, Dima?
Yeah, so basically Satoshi's lawyer, or aka Craig Wright, says that he did not receive the keys for that 8 billion of Bitcoin. Shocker, everybody's really expecting that. I think everybody believed that one. So, and you can base that off just the price of BSV, how much it pumped, everybody was truly believing that that's coming. I'm being very sarcastic if you can't tell. But anyway, so yeah, after the news, actually before even the news broke out for, from this lawyer, BSV was already retracing. There's already hidden resistance that was already starting to drop, and once the news came out, it dropped 40%, which is big. And then we have Bitcoin Cash taking its own its spot where it used to be above BSV. So
at any point did you think about shorting BSV? Like I know, like I don't know if I asked you while I was there, but it seemed like something that wasn't following like a traditional kind of fundamental thing or even technical. It was kind of just like a massive pump. So you got to be careful when you're setting those shorts. But did you ever think about shorting that?
Yeah, absolutely. I talked to quite a bit of people that were trading. That were talking about shorting it. The problem with that is that when you shorten it, and you have this huge train that's coming in and prices bumping, then you get that short squeeze and it overshoots. So it's hard to really pick like a spot where you can set up a pretty good short with just having the risk management in place. So you have to set up a short where it's just like you kind of set it and let it ride, and then eventually you're going to be all right once things retrace. So you have to be able to float and have use low leverage, and you have to be able to sit on this position and let the market unwind. So yeah, we definitely did talk about it. I personally did not take that position, but definitely it was a good short opportunity there.
Gotcha. Okay. And then I guess I would have one more question, and this one's directed toward Mike. Mike, how does this Craig Wright situation end?
It's basically over at this point, I think. But the biggest issue now is just going to basically be how he pays back this guy, right? I mean, essentially the family of David. It's either Kleinman or Kleinman. I can't remember the exact wording of the last name, but it seemed. I mean, he has lost all respect of the courts. Essentially, it was basically coming down to whether or not he could prove that he was Satoshi and had access to all of this Bitcoin. And now that he doesn't, I mean, it's not looking good for him. So I don't know how that affects BSV. Obviously, the court case was directly tied to it, but I can't. It seems pretty close to being over. I can't see this, kind of flip flopping in any way.
He still holds a pretty good amount of Bitcoin, right?
Well, yeah, until
until
that settlement. Yeah, right, exactly.
Gotcha. Yeah. All right. Well, we'll move along here. That was our segment for the breaking news. I know we kind of touched on some of them. I think we were just getting antsy for starting the episode, but we'll move into kind of our like more discussion-based news segment. I've got a pretty good one, so I appreciate you giving me this story here, Mike. This is CZ Fund talking about some diversification. I guess there was kind of a Telegram zealot, if you will, is this Twitter or Telegram? I can't really tell.
Twitter, Twitter DM.
Yeah. So I guess CZ got DM'd, and he eventually made this public, and he basically told this guy that he shouldn't have all his tokens. It shouldn't be 100% BNB, which is very surprising. Usually CZ's heavy on the shill fest for BNB, but he told this guy, hey, you need to diversify a little bit, hold some BTC, hold some other non-crypto assets. So not too big of a meaty story, but you get to see the other side of CZ telling a guy to maybe not have everything in BNB.
Yeah, and definitely just a general reminder that as the market kind of starts to have these crazy swings, right? When they swing up, I feel like it's almost less of an issue for a lot of people who have been in crypto for a little while now, compared to when it swings up for those newer people in crypto who, now maybe you put $1,000 in it or $10,000 in, and you're up 50 or 100%. You get into this hype cycle, and you get into this thought process of, well, this is never going to stop, right? It's never going to go back down. And I think that's kind of what this guy was running into. So just a general reminder for those of you who are kind of new to the space here, right? There are wild swings. You always want to be diversified, be safe out there. Obviously not, financial advice, but having seen the ICO boom and bust and all this stuff, it can be crazy. So.
Yeah. One thing that I want to mention also, CZ has been kind of vocal with BNB on Twitter, and he was saying things like, good luck shorting, or like, the bears are not going to sustain this for BNB, blah, 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 all this stuff, which is like, as somebody who's been in crypto and been in trading for a while, they understand that, he's just, kind of joking around, or like, he's not saying like it's never gonna go down. But for those people that haven't been in the industry, I feel like, oh, that's it. He's saying like it's a guaranteed thing, and might be taking that literally. So, in that case, I think some of the people are getting hurt, and I think CZ felt that, and that's why he had to make that public.
Yeah, it's amazing once the market comes back, the people that come out of the woodwork and are losing their keys and all these things we'll get to in a second. But I think that was a point that was made on Twitter about kind of there being an IQ test needed for accredited investors. I think that as the accreditation rules and regulations change, there still should probably be some type of IQ test, or else you'll end up with these guys saying, "I'm going to follow my Lord and Savior Changpeng to the grave," I guess. But yeah, we got the next new piece of news here. But I did want to shout out Free Music, FREI Music. Deadmau5 label just partnered with Emanate. So I don't know too much about Emanate. Do you guys know anything about Emanate?
I remember hearing from them. I think they were an ICO, but that's cool. That's we haven't really heard much about a kind of music crypto or music blockchain interaction or integration. So that's new. It seems like they're popping up all over the place, whether it's the Sacramento Kings or I think the EU just came out with something about a digital currency. So it's popping up all over, but music and blockchain is new as of now.
Yeah, and Deadmau5 has been pretty good with experimenting with new technology. He's a tech guy, himself. And yeah, it's pretty cool that a piece of news like that comes out.
Yeah, we appreciate you dropping that in. We'll definitely look into Emanate. I mean, if they are a strong project, we'll definitely reach out. Yeah, Emanate, that almost hit me because I believe Emanate is on EOS, as Mr. Sheffield was saying. I remember hearing something about him, but yeah, we'll reach out to Emanate and see if we can talk to him. Let's do that.
Cool. All right. So moving right along. Next piece of news is basically an article came out saying that the rally for BTC for 2020 is not over. And basically the person describes just the volume that we've seen in BTC and how BTC price has been reacting to the sell volume that we've been getting, right, for these certain corrections. So as I talk about technical analysis on the desk, I've talked to you guys about people that get in at prices of like 6,800, and then they carry their position until like 9K, 9.2. So they're up already quite significantly. And we had the CME group, that was really long on BTC. And you see that those people are starting to take profits. So when that happens, they start selling their positions, and that's when we get the correction for BTC. But what's interesting in this article that's describing here is that how much of that selling volume from profit takers and so on that are ready to scale out of their positions has been absorbed by the new buyers that are coming in on the market, which essentially you have selling volume coming in, but it's getting absorbed by the buying volume, because you have people that are coming in and they're seeing this potential to go higher. So we haven't had really, with the recent retracement where we got almost to 9,200 on BTC, we haven't had really that significant of a correction where we just like dropped to like 8,600 right now, but based on the selling volume that was there, we should have been dropped even lower than that. But that's not the case, because we had buyers that are coming in and basically absorbing all of that, not all of it, but a pretty good amount of that selling pressure that happened.
Yeah, if you look at the charts over the last probably 2-3 days, there's some giant wicks down to 84, 8,500, I think it was. So good to see, whether it's retail or new or kind of more educated investors, they're placing those limit orders basically a tad bit lower, trying to get in at a cheaper price. And at this point, it's paid off for them a little bit. Like I said at the beginning of the episode, it's like BTC stablecoin, kind of category right now. Is it, it's really not moving much from about 86.50.
Yeah, it's so a little bit of a sideways action there. And overall, we're up, over 20% for the year on BTC already. So.
Yep, at least, yeah.
I know while we were talking about the market while I was up there, you had really placed a big significance on that 250 billion market cap. Did you what can you break that down for the people who are in the chat?
Yeah, obviously I'm not our TA kind of master here, but I don't, correct me if I'm wrong here, essentially, Dean. But essentially, the charts that I was watching, right, showed that we had broken out of a downward trend for Bitcoin overall, and that that was looking bullish. It was looking great, and basically the final kind of downward trend that we needed to break to really kind of fully push us into this new dynamic, and hopefully what would end up being a bull market is the 250 billion market cap. So this is not obviously just Bitcoin. This is all of the crypto assets out there, and if you look at the charts, we're really close. I think at these levels we're sitting at like 235. Whenever we were up around 90, 100, 90, 50, we were at like 247, 248. So at 9,200, we should be right at 250 or a little bit over, significantly over if we see another alt boom. But, that I know the 200 MA is a big one that I'm sure Dimitri will talk about tomorrow. But, we're so close to being able to kind of break out there and really start a new, a new kind of shift or dynamic for 2020. So we'll see.
Gotcha.
Yeah, I'm dropping a link to the chart for the total market cap, with just some levels in the channel that you were talking about, so people can see, kind of the candles and where we are on right now.
Yeah.
So
yeah, and there's stay tuned. There's an interesting piece that we're going to talk through when we kind of move into a specifically Bitcoin section about whether or not Bitcoin dominance is like a real thing. So stay tuned. I definitely want to get your thoughts on that. But as we were kind of hanging out and looking through the markets this weekend, obviously always trying to keep you guys posted on what's going on. Behind the scenes, it seems like that on the dark markets, or essentially dark net, right? Anything that has now obviously come after Silk Road, I think is basically kind of classified as a Silk Road knockoff. There's pretty interesting things happening. I guess one of the largest is called Empire, and as of late, for the last few weeks, they've been getting DDoSed. So there's a ton of liquidity on this Empire. I guess traditionally Bitcoin is the currency used on these dark markets, where you can buy drugs illegally and all these different things. But people don't really know where to go now that Empire has been DDoS. So you have all these small little darknet markets that are popping up, who, ironically enough, and kind of similarly to crypto exchanges, have a bit more security, right? They have maybe not as much liquidity as a larger exchange, but they're really focused on improving things that were at a big fault for Empire. So, security, right? The more security, more kind of input you put into security, the less you're going to get DDoSed, essentially. I mean, that's obviously rough, but these smaller markets are okay and are starting to kind of gain traction. Now, they're, other than just a general security, they're also focused on using Monero over Bitcoin. Bitcoin is obviously very traceable. If you're doing these illegal things, that can be a problem. Nobody wants to go to jail if you're interacting on these dark markets. So it's kind of this this interesting dynamic happening between the smaller darknet markets who don't have the same liquidity as the larger ones, but have, say, better security, are using more private cryptocurrencies like Monero, and trying to take a chunk out of the larger ones who have more liquidity but want to focus on ease of use, right, versus security, because they know that if it's easier to get on there, and assuming a lot of the people who are doing this don't actually care about security, they're the ones that are going to be pulling more fees. They're going to be the ones that kind of take over. So we'll drop those links. If you guys want to learn more about it, obviously take a look after the episode. But it was definitely fascinating to me.
Yeah, it's interesting. Maybe the smaller ones are attacking basically Empire and squeezing them out. And since if Empire is the biggest one, they have probably the most vendors, in there. So then it's really up to the vendors going to be to switch over to those smaller platforms and create a new leader. But we've seen, kind of that happen in the darknet market for a while, with the Silk Road, and so on. So one goes down, and then one major goes down, and then it reshuffles to another one that's supposedly better and learns some mistakes and whatnot.
I imagine when Barry's not listening to our podcast that he's just like trolling the darknet.
Is he in the chat today? Where's Barry?
He's doing his rehab, I'm sure. He's always saying that he's going to rehab, but not rehab like alcoholism, guys. Rehab. I'm sure he's a physical therapist. At least that's what we've kind of deduced from the interactions we've had with Barry up to this point. So,
yeah, shout out Barry. We'll make sure the time is that the normal time next week, so we can get him on here. Yeah,
I'll timestamp when we call him out too. But anyways, I got another tabloid story here, a little bit farther down the list, but still just as important. Peter Schiff called out Bitcoin once again. I think he just likes to come back when we get those major volatile markets, like you guys were saying, because he thinks that he can attract the most viewers at that point. So if you guys, again, you're living under a rock if you haven't heard this story. He basically said that he set up a Bitcoin wallet, and he was using a password that he uses all the time. This is probably one of those like more user friendly wallets that doesn't, I guess
I think it was a blockchain wallet. So, he should have the private key.
He should have the private key, but it was like it had a password associated with it too. So it was like one of the more user friendly. It wasn't just like, here, have your, let's like input your seed or input your, code. It was literally like a typed out password, not just like a random number assortment like you would get with a hardware wallet, something like that. But anyways, there was a lot of people weighed in here. This was Pomp weighed in, but you mainly got the story from Eric Voorhees from Shapeshift, and he was saying that he actually was the one that helped set up the wallet for Peter Schiff, and he gave him the hardware, the private keys. He knows that Peter Schiff used a password, and so basically this was just Peter Schiff trolling the nation, and I think it was something about $50 that Eric Voorhees was talking about. So where Peter was coming out and saying, hey, I lost all my Bitcoin, it was really just $50 worth, and he was kind of trolling us with this, hey, I forgot my password, or the I think he even said he didn't forget his password. It was the software that forgot his password. So yeah,
it was pretty cringe. And I guess he didn't put much into it, but a bunch of people sent him Bitcoin. At some point in the entire Peter Schiff, kind of saga that we've had here, right? People sent him significant amount. I mean, he had like $2,000, over $2,000 in that wallet. So he was, understandlandly a little upset, but I mean, he basically doxed himself, in a lot of ways. He said that he used, like a traditional email that he always uses. And then he said that the password he was using, to Q's point, was a simple numeric password.
Yeah, that he uses everywhere.
Yeah. So it's like, okay, well, let me just, log on to, if I can somehow get access to Peter's email or something like this. Like, you just don't want to give that information to crypto Twitter. And I obviously imagine a bunch of people out there trying to figure this out and just typing in 1, 2, 3, 4, 5, 6 for his password. So
I think he's just, in general, he's just getting destroyed on Twitter because BTC has been moving higher. And they've been comparing it with the gold and everything, right? And now the BTC is moving higher, and he's like, all right, let me log in and see how much BTC I got, So once BTC is up, he wants to log in and then check out his holdings,
Yeah, it was interesting to hear what Ash Oro had to say about Peter Schiff, because I think he was working under Peter for what I forgot what offshore bank, but that was a fun story he told about Peter Schiff, and he still doesn't believe that Peter's ever going to figure it out, and I don't think, based on this story, that we can disagree with him. So that was the tabloid story from Peter. He basically trolled the entire crypto Twitter, as he likes to do. But we've got Tether next. Jason Stallings, what up? Block Arcade, what is going on, man? Good to see you in the chat.
Yeah, no doubt, man. Good to see you there, Jason. A friend of Sutler Ventures and obviously iOS. So happy to have you there. So Tether, and obviously, just as we have an ongoing Peter Schiff drama, we have an ongoing Tether drama, right? We're always keeping you guys up to date on this stuff. So If you remember and have been tuning into these Layer 1 lives, a handful of weeks ago, we talked about essentially a lawsuit coming from private investors that stated Tether was at some point manipulating the crypto markets, and these people lost money, and thus, then Tether owes them money. Well, that was, I think, last week or the week before, supposedly removed, right? That lawsuit was canceled, but it has been refiled in the form of a class action lawsuit. So now there are 4 different groups that are claiming basically at some point over the previous years, Tether using the way that they essentially print the USDT token to manipulate the markets in some way. This has always kind of been a deeper crypto conspiracy, as we would call it, especially as we saw the run up in 2017, really end of 2017, because you saw a correlation between Tether printing USDT into the market, which is supposedly supposed to be for people who are exchanging dollars for those Tether tokens to then buy Bitcoin. It was very correlated with that pump in 2017. So the conspiracy basically goes that there weren't actually real buyers there. This was just Tether printing their own money, going out, pumping Bitcoin like crazy. Lots of fun YouTube videos on that, but
you got to get
it's
the
ongoing.
tinfoil hat. I think that might just be like that. That's like kind of like the moon landing. It's like, yeah, that actually, that happened like that. I don't know. I think people mostly believe that did happen. I don't know how much you can call it a conspiracy, but
I definitely believe it happened.
Yeah.
I think it's pretty believable that Tether and Bitfinex would do that. The little data that is out there shows that, but when it comes to proving that in court against the army of lawyers that Tether and Bitfinex have, good luck.
Yeah.
You're going to need a significant amount of cash to do that.
Yeah, you guys in the chat, let us know like what is your favorite Bitcoin or crypto conspiracy. That would be an interesting topic to hear from you guys on. If you have any conspiracies that you believe in.
Definitely. So moving on here, we've got some more Bitcoin news, more Bitfinex news, really. What's going on with this whale moving money, Deem?
Yeah, so the news broke out, and crypto Twitter blew up basically, with the move that we've seen from one cold wallet to another, and basically coming from Bitfinex. And I thought I had this amount somewhere. Yeah, it was 1 billion in US dollars, basically, that was moved. The amount of Bitcoin between the 2 cold wallets, and basically, that whole speculation about like, oh, Bitfinex is trying to do it again. Here we go. But really, this is something that has occurred in the past, and with the bigger amount, like the article talks about, basically in December they moved 8.9 billion in value of BTC. So it's like it happens, quite a bit, and when you have Bitfinex, which is the biggest holder of Bitcoin, as far as exchanges go, they'll definitely, shuffle their funds a little bit into storages and cold wallets and so on to make sure, the security there and so on. So, and then you have, obviously maybe some certain funds reshuffling as well into different cold wallets. But I think those days are kind of over for when, what you're talking about, where Bitfinex used to just single-handedly probably, pump the markets, and we saw that correlation there. Right now, we're not seeing that. But what's interesting also in this article is that overall, the concentration of Bitcoin in terms of whales, being holding those big stashes, the concentration is not as significant as on altcoins. So meaning that there are more distribution of different wallets that have, like, let's say 1,000 BTC or 10,000 BTC, and they're diversified into different wallets, where it's distributed between, I guess if you'd say, between people and funds or exchanges,
right,
more than alts, because you'll have on alts, you'll have like the founders and the team hold like a huge amount, while in BTC we're seeing more and more distribution between these different wallets, where it's not solely concentrated on one thing. But you could also say that wallets don't necessarily mean that it's a single user, right?
Right.
So that's another thing you could talk about, because you could just say you can just have multiple wallets and
you can make it look distributed.
Right. So there's that argument there as well.
Yeah. Go ahead, Mike.
I was going to say people are always scared, right? I think when you see kind of the various bots on Twitter, it's I think Whale Alert or Whale Bot is one of them, right? One of the more popular ones when this large chunk of Bitcoin moves and it's from what you would call unknown wallet to unknown wallet.
Yeah.
And traditionally, newer retail investors would get scared that the market was going to dump, especially if it went from, unknown wallet to Coinbase.
Yeah.
It's like, okay, this guy's cashing out.
Yeah.
When in reality, that's not often the case.
Right.
So, we're moving into a weird time here where obviously general adoption for Bitcoin is growing significantly, right? The number of exchanges that have, like you said, over 1,000 Bitcoin or over 10,000 Bitcoin continues to grow. You've got, now major custody providers with segregated wallets who are going to start to have thousands and thousands of Bitcoin. So I don't know how reliable this, this kind of movement of Bitcoin is going to be in the future, just because, like you said, that distribution has increased. But we're definitely in the billions when it comes to dollar value of people moving stuff around, whereas back in the day it was kind of hundreds of millions. So at least we're growing in that sense.
Yeah, I don't mean to pop in like halfway through that conversation. I was trying to find a charger per usual, but I'm really interested in that type of distribution of tokens and how that decentralizes an ecosystem. I'm full steam ahead with that principle, that Pareto distribution principle, where do you guys know about this principle?
I've heard of it before, but I can't think of it off the top.
So I'm sure some people in the chat probably know. Maybe if you don't, it's just the tendency for I'll give you an example. When you're in a group chat and you're in or not a group chat, let's say you're in school and you're doing a group project, it's a tendency for 80% of the work to be done by 20% of the people. It works the same thing with money. If you kind of give each person $100 and there's 100 people, let's say it's even another classroom, and you say, set up your economy. It's a tendency for that money to move into, most of the money to move in a smaller amount of people's hands. So and on that same 20 or 80-20 principle. So the way that works is in like decentralizing ecosystem is with tokens, you obviously don't want to have that Pareto distribution, but it's a human, principle. It's like, this is how this works. So all these Nervos and all of these new, proof of stake and proof of work protocols, they're all looking to solve this Pareto distribution problem, because if you have most of the network being controlled by a small amount of people, then that's what decentralization is trying to get away from. But yeah,
Right.
if you're looking for the definition, it's just for 80% of either money or 80% of work being done by 20% of people.
Yeah, that 80-20 rule is, really kind of pervasive through investing and trading and a lot of different things in life. So that's fascinating. I'll take a look there.
What do you guys think?
Sure.
What do you guys think is like the most decentralized system? Just like broad lightning question, most decentralized system other than Bitcoin? Because I think Bitcoin, we talked about it a lot on the podcast, and we've said like it kind of evolved very openly and freely, and it could have gotten jumped on by a whale. So many things could have gone wrong, but it didn't, and it was able to kind of benefit, and now it's super decentralized, like Dimitri's saying, or at least decentralized somewhat. But what's like the next one you guys would think of, like the next network that you could see like isn't centralized in a small amount of people's hands?
I would say Ether Monero.
I was gonna say Monero.
Yeah. Really?
Yeah.
What makes it so?
Just, essentially the number of, Monero's proof of work. So, essentially number of miners relative to, I would say probably the size of their holdings or setup.
Got it.
So, yeah, I know Monero is pretty sufficiently decentralized. That, from a data standpoint, number standpoint, I don't have obviously the exact numbers, but yeah, those two pop out for me.
Yeah. I agree with you on that. The one thing I just want to mention is like, what is the risk of having the concentration, let's say, in capital like that? So if somebody has huge stacks of BTC, I think the retail market is their first impression is that, well, if it, a lot, like if a single person has a lot of BTC, then they can control, basically the BTC price, right?
Yeah, and that kind of flows into the story about this Bitcoin whale that we're talking about, right? Whether it's Bitfinex or it's these whales working together. I mean, that's always been kind of the manipulation theory that the traditional financial world has given Bitcoin, and that because you have so many people that got in early and got hundreds of thousands of Bitcoin or tens of thousands of Bitcoin, now they have too much weight in this network. But the risk essentially is the fragility of if it's, let's say in the example of proof of work, it's a fragility in the hash rate, right? And the mining process that is happening. Because if you have, maybe it's a new proof of work network and you have the underlying foundation who's a major miner and then one other pool, right? And maybe they're both located in China, right? If China bans mining as a whole, well, that network's done, right? Unless new miners come in to pick it up, and that network essentially proves itself as being what you would call anti-fragile, or it has some anti-fragility concept to it. That it's pretty much going to die, right?
Yeah.
That would be the case. Bitcoin, we've seen it go way up in price, way down in price over and over and over again, right? 3, 4, 5 different cycles now. And you've seen lots of miners capitulate, but more have always come in to basically pick up the slack and make sure that transactions are processed and the network continues on. That's the biggest thing.
Yeah, we had some interesting comments come through too, and I think Mudcrab, I want to get to his comment after Jason's, but Jason says Tezos has staking limits for nodes. I think that's interesting. Makes it so node can't easily take over with more votes. I think you have to, with that comment, I think you have to talk about reputation and authentication systems, because you could technically, even though it has a staking limit, you can create 2 nodes. We've seen that on multiple. EOS had that problem where they had those shell nodes where it was like 4 nodes in the top 40 were, under the same umbrella. And that goes into Rude Mudcrab's point, and I'll just call him Mudcrab from now on. Mudcrab's point, and this is I want to hear your thoughts on this, guys. He says, what makes BTC the most decentralized? Decentralization is about distribution of power and control and not total network hash power.
I think, obviously, right, like decentralization can be defined in a variety of different ways. I think the way that I define it when it comes to Bitcoin is, I think it's focused certainly on decentralization, right? But I see the point around, the fact that 50+% of hash power is in China, right? Yeah. And is even in one region, I think. So I get the argument there, but when like I said, when looking at the anti-fragility of Bitcoin, I would argue that no other network, if those miners dropped off, would be able to survive, right? Whereas Bitcoin, would very quickly be picked up by smaller miners for a while. You probably have a situation where a lot of different people could get in and mine Bitcoin, and then just as we've seen now, it would kind of coagulate into pools and be dominated by a smaller group of miners in these pools. So it's kind of this decentralization isn't like a perfect, obviously, black and white. It's not 0 or 1, like, hey, this is decentralized, hey, this isn't decentralized. But I think a lot of it has to do with the actual, ongoing process and evolution of decentralization, and that kind of moving range of how decentralized it is. A good thing happening with Bitcoin, and I think we'll see this more and more in 2020, especially as in the West and US primarily, Bitcoin becomes something that's more accepted by institutional investors. I think we'll start to see some giant mining pools pop up in the US, right, and start to compete with China globally. Whether or not, it'll be a massive impact immediately is hard to say, but hopefully that answers the
Yeah, he's still in the comment here, and to add on to your point, and we're having a fascinating discussion, so I think we should stick on it. But with the increase, and I've been super interested in Peter Zahan and guys talking about like macro events and things in the world, and with the U.S. moving more towards kind of self sustainability with energy, I think that's going to be true. Like we have so much natural gas in the United States that to your point, like people are going to be able to throw up huge mining farms for very little cost, as opposed to the cost that it would take to have it run by traditional electricity. I think that's going to be a huge play that we see happen over the next. If Bitcoin continues its run, that's going to be something to keep an eye on. Is the kind of almost free energy that's going to be able to use in the U.S. We have so much of it. But Dima, did you have a point before I get to Crab's comment?
Yeah, no, I just want to mention that if things do hit the fan, like, with the regulations and so on, I think because there's so much interest in where Bitcoin is and how early of a stage it is, there's definitely right now out there infrastructure and competitors that are waiting for a moment to start gobbling up some of the assets, some of the things that, let's say, facilities that can't operate anymore because of regulations and so on. So I think it kind of goes back to the similar thing where you have when you have profit takers in BTC that take profits and they move the price lower, but you have such a big buy-in volume that's coming in that's preventing that from happening. So I think if there's something where you have a big crisis effect in Bitcoin with miners, then I think there's going to be enough of the buyers that's going to come in, and you're going to have consolidation in that sector, and it's not going to really affect that much BTC just in general. And you'll see that distribution of centralization start, moving around if those big players start, going down, because there's so much interest to be in that business at this early stage.
Gotcha. Well, we appreciate all those comments, man. I think we had a great conversation there, and we all had some fascinating points. Mudcrab looks like he's going. He says, "I love you, dudes." He had a couple more comments, and then he said, "Love you, dudes." Anyways, I got to get back to welding/work. We'll be listening. Cheers. So we appreciate your comments, man. I think we should continue on with the episode here, but we appreciate those comments as always.
Yeah, no doubt. Shout out Mudcrab there. Keep it coming for sure. So the next article here is from our friends over at Bitwise, which if you don't remember, they are the ones that kind of came out with the data on real exchange or real volume, basically saying that the majority of exchanges, especially Asian exchanges, are using wash trading and kind of fudging the volume numbers. So they, along with a website or data company on traditional ETFs, have come out and talked a little bit about 2020 and financial advisors, specifically private registered investment advisors. So these are, basically independent RIAs who don't have some sort of giant, maybe it's an umbrella bank or umbrella, kind of doctrine that they have to follow when it comes to investing. And basically what they found was that roughly 9% of these independent RIAs currently allocate a percentage of client funds to crypto assets. And further, over 50%, it looks like 54% of financial advisors view Bitcoin's lack of correlation to other assets as a reason to include Bitcoin into their clients' portfolio. So, the ever ongoing kind of trend or narrative around the institutionalization of crypto and all this money that's going to be coming in from institutional investors is continuing to pick up steam here in 2020, specifically in this case around those independent RIAs. But it was an interesting article. Obviously, we'll link it. There was some data as well that talked about what was the concern for people, that other 46% that did not want to put any of their clients' money into Bitcoin. And that, kind of grouping basically said that it was regulatory concerns. That was the largest, followed by the fact that the price was too volatile. I've heard this one before, is that there's no real way to value cryptocurrencies, or at least no one has an idea of how to value them. So it's hard to, kind of apply the same valuation principles that they would use traditionally to cryptocurrencies. And thus it makes it difficult to know, how much to include in the basket or what prices to buy or whatnot. Another interesting one here, lack of easily accessible investment vehicles like ETFs or mutual funds, right? That was a pretty significant chunk at 39%. Continues with the ETF narrative around that being a big thing for a lot of, maybe older institutional money. Custody concerns, fear of hacks. I think that's very quickly disappearing. And then finally, a lack of understanding, which is obviously an ongoing process and kind of, has to do with the desire to understand it, I think, more than anything. So we see this narrative continuing with, all of this quote unquote institutional money who's supposed to be moving in. And, thanks to Forbes again here, we're actually starting to get some data showing that it's, quite a bit bigger than just 1 or 2% of people who are allocating some money to crypto, at least in 2020.
Yeah, and just in general, I think these financial advisors that are, allocating some capital into Bitcoin for their clients, they are seeing things in the market, what's going on in terms of the stock market, where we are now, how everything is valued, how everything is blown up, out of proportion in terms of value and PE ratios. So they're seeing that Bitcoin is actually a pretty good hedge when it comes to things, if things start going wrong for the stock market, and we have that type of risk-off environment, which is interesting because, you would think that Bitcoin is volatile, so it would be associated with risk-on environment where people are looking to chase the yield in Bitcoin, and throw money in there. But actually, we've seen recently where, you have stock market going down because geopolitical issues, and then you have Bitcoin going up, right? And then you have gold going up, So like those are the type of events that are going to continue to happen, and people are going to start recognizing that as being the hedge to issues in the market that might occur.
Yeah, I think we had a couple people kind of reach back out to us and say they listened to that Iran conflict episode, Dima, and I really liked your point there when you talked about, we have this narrative of this is a safe haven asset so that when something does happen, people can flee into Bitcoin or, easily, flee into Bitcoin, but they really don't have that availability right now. So What was the actual, pump that we saw after the Iranian conflict? Was it just people trading off of this narrative instead of it actually playing out in real time? So that's super interesting, man. I guess like one of the questions I would have to you guys is because Mike, you talked about like people not being that aren't in crypto don't really understand how to value crypto assets. Does some of that have to do with like the amount of volume and the fact that these are all like kind of we quote unquote micro cap, we say micro cap tokens, but like when something has such low volume, it has the ability to be like manipulated very easily. Is it? Right. And am I going on the right track here? Like the more volume that we get in, the more that valuation can actually be like tied to real, instances fundamentally and technically.
Kind of the valuation, I think the concerns that they're bringing up have more to do with the fact that no one has been able to come up with a method for valuing Bitcoin or other cryptocurrencies that has stood the test of time, right? So like whether it's Bernisky or Nick Carter or any of these other, really crypto geniuses that you see on crypto Twitter who kind of come out with a new way to value Bitcoin, and it's generally focused on something that has to do with on-chain analytics, or maybe it has to do with the size and dollar value of Bitcoin transactions over a period of time, something like this, right? It works for like 3 months or it works for 6 months, and then the method should show that Bitcoin should decline in price and it pumps, or vice versa, right? So I think that's more of their concern. But you do bring up another good concern when it comes to a lot of larger institutions, right? Pension funds, mutual funds, where if you need to put $1 billion into Bitcoin, right? It's a lot more difficult to do that than it is in, say, gold, right? Because the volumes are high enough in gold that you have basically an added liquidity that you don't yet see in Bitcoin. So
it's growing though.
It is. I mean, things like BACT, things like, the CME and their options coming out, right? These are all kind of baby steps to get there. But at the end of the day, these pensions funds aren't going to jump in until everything is there, right? Whether it's an ETF or whatever the case may be. The other interesting point here, obviously the fact that Bitcoin is not correlated to traditional equities. And as we saw with this Iran conflict, to your point, Q, it actually moved in line with gold almost perfectly. That's a big plus for people. But another big plus that the article talks about is the fact, or at least that I kind of inferred from the article, is that the fact that the potential upside in Bitcoin, when invested in a very small amount, right, kind of like 1% or less in an overall portfolio, that potential upside outweighs the downside risk when looking at the whole portfolio. So there are basically various ratios that these investment advisors will use, or these portfolio managers will use, that say, and I know Pomp talks about this a lot, that basically say, okay, well, if I put, 0.5% of the overall portfolio value into Bitcoin and it goes to zero, right? Obviously there's money lost, but the overall correlation to the stock market, to traditional equities, decreases, right? So you end up with these various figures, whether it's, like omega ratio or Sharpe ratio, or these various things that these folks use to manage these portfolios. They get to a more attractive level. And I think that's a lot of what we're starting to see with, more of these kind of portfolio managers or registered investment advisors or funds or whatnot moving in. They're not dropping 20% of their portfolio and becoming the next, giant crypto fund, but they're starting to see, okay, hey, the potential upside here in Bitcoin or in ETH or some of these other crypto assets really outweighs the downside risk.
Yeah, I remember him specifically talking about how it's fiduciary duty for them to really, allocate a small percentage of it because of the things that you mentioned. So yeah, absolutely.
Yeah, that was a big piece CNBC was running when he said it's what it would be negligence, I think is what he said, for them to not allocate any capital into Bitcoin. But anyways, did you want to hit on this BTC dominance before we move on to ETH, Mike? I know we have a couple comments. We have Rob Groove. He said, I'm new here. I'd love to know more about Emanate. So we'll get to Emanate here in a second. He said, thanks also in regards to BTC, when Amish. So I'm not really sure what he's going at with
when
that.
Amish. When can the Amish buy Bitcoin?
Yeah, maybe. And then Scott Harris Firestone, our guy, an OG, he said, I'm going to have to rewatch, and he gave us the thumbs up. So appreciate you, Scott.
Nice, man. What's up, Scott? Yeah, let me hit this Bitcoin dominance here. I know a lot of people are fans of alts. A lot of people, us included, Dimitri and I included, you included, Q, use this basically Bitcoin dominance level to track the success of alts relative to Bitcoin. So for those who don't, if you're newer to crypto, you don't know what Bitcoin dominance is. Essentially, it is the percentage of market cap that Bitcoin has over the rest of the alts, right? So every other cryptocurrency other than Bitcoin at this point makes up about 35 to 36% of the total crypto market cap, whereas Bitcoin makes up, 65, 66%. But an interesting article came out on Bitcoinist, which, for context sake is obviously, pro Bitcoin, traditionally only talk about Bitcoin. Referenced a tweet from a popular account called Ceteris Paribus that talks about why Bitcoin dominance is dumb, why you shouldn't follow it. And they reference some data that says essentially 7% of alt dominance launched in 2017, right? So 7% of that total 35 or 36% altcoin dominance was literally just launched 3 years or less. 4%, 2 years or less. 4% launched in 2018, and an additional 4% launched in 2019. So the point that they're making is that Bitcoin dominance, this percentage is not something that should be used over time, because the speed and degree and kind of overvaluation that comes with the way that market cap is calculated is impossible for Bitcoin to keep up with.
Yeah.
Right. Bitcoin would have to, the price would have to scale at such a monumental rate for, in their point, you to actually know how dominant Bitcoin is. So I wanted to get your guys' thoughts on this. Obviously, this is, something as alt holders, as bag holders, we follow, right? We'd like to see that altcoin dominance tick. But with, 15% of that total alt dominance having been launched in 3 years or less, do you think this is a relevant point?
Yeah, first of all, my first question would be, did they reference Dimitri's desk when they did this? Because
My
I
man.
know Dimitri throws up the Bitcoin dominance. I'll throw this Dimitri's way, but basically, I think her main point is correct, right? Like it's easy to see that those statistics match up with the actual data that they're using for that chart. But I also think traders like Dimitri, and I'll let him speak for himself, they're going off trends, right? Like they're going off the trend of what that chart has done in the past and what it can do in the future. So I think both can be right. Maybe it's not as accurate to say that it's Bitcoin dominance because you're just adding alts into the bucket. But
Right.
I also think Dimitri and people who trade like him are just trading off the trends that they see on those charts. So
Yeah, and you have to. So, thanks for the shout out for Dimitri's desk, of course. But you have to keep in mind that and I talked about this on the desk as well. It's interesting to see alt market because I compared the dominance of BTC and total alt market cap. And it's interesting to see the alt market cap around when we have IEOs, big IEOs that come out, right? And then the recent one, like with the BSV, that market cap just went super high, right? Because of the pump that they had, and this is like what, number 5 right now, and on the market cap, ranking. So it's like, when you have an events like that, and you can see a huge spike in total alt market cap, you can actually pinpoint to a certain specific tokens that are causing, this pump on it, which essentially affects BTC dominance. And when you see something like this, that's when you're like, all right, is this really like the alt season? Is this for real, or is this just some kind of a, just a one-off scenario? And that's when you put like maybe a block over that data, and like, okay, this is not realistic data that's not indicating something useful for me to pinpoint like the alt season is here. I think that's my opinion about that.
Yeah.
Specifically, you have to keep in mind when you're looking at it.
That's a fair point for sure.
Take it with a grain of salt.
If the total market cap is 250 billion, and essentially Bitcoin makes up, what's the math there, like 160, 170 billion, and then you see Bitcoin SV, like you said, jump by 10 billion because Capineer is pumping it, right? I mean, that's obviously going to be a big tick, but at playing devil's advocate here, right? You would also assume that as more alts come out, it will obviously be harder for one single token to pump that overall altcoin market cap, right? Which, as we saw in this latest Bitcoin pump, many alts rallied, right? Obviously, Bitcoin SV was the one that probably rallied the most, at least of the top 100. But EOS was up by 40%, ETH Classic was up by 40, 50%, and if you look at that chart on Dimitri's desk, as I'm sure you'll show it tomorrow at 5 p.m.
5 p.m. Eastern.
It's a pretty significant tick, right? Like it's a pretty significant downward, BTC dominance tick and upward altcoin market cap tick. So
I also think she's not accounting for all the altcoins that eventually die, right? Like there's a ton dying over time, and I don't know how many have officially, quote unquote, like reached zero. But she's not accounting for the hex token. Yeah, hex token, something like that. Like, how does that play into it? Because you do have a lot of influx into this altcoin dominance with all these tokens being pushed to the market, but a lot of those end up at near zero. So maybe it does eventually go back to the mean.
Yeah, and that's been a big complaint. Obviously, there's been lots of complaints with coin market cap, but that's one of the big ones, right? It's like, okay, these tokens are number, 1,242, and there's no volume. They're not listed on any exchanges. Why are you still including market cap on a price that's not even, it's barely publicly traded? It's just skewing the data. So anyway, interesting kind of theory there from Bitcoiners. Take a look if you're interested. I've hit 2 here in a row. Q, what's going on with the Decentraland public launch? It's been a long time coming.
Yeah, it has. And we had Brian Flynn. Sorry, Brian. I messed up. I was going to say Brian Kerr because we had Brian Kerr from Kava, but we had Brian Flynn from Dapper Labs on the podcast last week. And deep in the episode, we started talking about metaverses and multiverses. And Decentraland is surely like one of these metaverses that has, been talked about for the last 2 years. I think you were telling me that the launch for the ICO was like 3 years ago now, or coming up like in the next couple months, maybe 4 or 5 months.
Wow.
I think it was 2.5 years. Yeah, I think it was August 17, I want to say.
Yeah.
I remember like it was yesterday.
Well, your brother also like bought into the Genesis City. It was like a really cool idea, a lot like, you know, Crypto Kitties. It was like this really, you know, thing before its time, as we've seen now, because it took 2 years or 2.5 years for the actual product to launch, which, and I'm going to talk to Dimitri here, talks about their the way they were able to conserve their capital. And I think you always talked about a lot of ICOs and how they handled their ICOs, and a lot of teams, you know, didn't have any money at the end of the bubble bursting. And I think Decentraland was one of those that had to have sold at least, you know, some of their funds somewhere around, you know, in that 1,200 range, or, you know, near there, because they've been able to, you know, not take in any revenue for the last 2 years, and, you know, build this product. So I'm definitely excited for this. This is going to be launched on February 20th. This is the public launch of Decentraland's world, which is crazy to even say, but you can go in there. I don't think you need a VR headset or anything. You can use a browser and you can go into these worlds, you know, box by box. People have bought decentralized real estate, VR real estate, and they've been able to put their crypto kitties, or, you know, they have a whole SDK to, and I don't think it's very user friendly. So like I wouldn't be able to jump in there and, you know, just build a house, or, you know, people build crazy stuff on their plots of land. But yeah, I mean, it's definitely going to be built out over time. With the launch on the 20th, there's going to be a Decentraland DAO that's going to be launched with it to provide some, you know, decentralized kind of infrastructure, probably voting, communications, all these things that DAOs handle. So I'm stoked. You know how I feel on, you know, yeah, go ahead.
February 20th. It's happening finally. Yeah. A lot of people are going to be stoked. I mean, if you haven't seen it, check out their Twitter. They came out with a pretty awesome looking video for, you know, Decentraland, the first launch here. As is always the case with me, right? I'm a guy who doesn't like to be first through the door. So it'll be interesting to see what happens when they launch, right? I mean, it is supposedly the first truly decentralized, you know, kind of alternate reality or VR world. So it could go beautifully, or it could go terribly wrong. We'll see.
Yeah, much like voice, I would hope that they have low expectations for this and it grows out over time. I don't think you should like come out and try to blow the doors off this thing. I think there's been you know, metaverses created like Second Life and a couple of other these that aren't built on blockchain technology. So that will be cool. I mean, decentralized real estate is something that, or like VR real estate is something I'm, you know, interested in. People have made money on Second Life, you know, buying certain plots of land and, you know, turning it into casinos, turning it into strip clubs or what have you. So yeah, definitely cool to see Decentraland come out after such a long time.
Yeah, we're trying to lock down someone from the Decentraland team for before the launch. So if you're super interested in this, stay tuned for that. I think we're aiming for the 18th, but hopefully we can get them on, you know, really get the details of what's going to happen in this first launch. But, you know, if you've been around since the ICO time, this was one of the biggest ones. It's nice to see another one come to fruition here.
Absolutely.
So, interesting story popped up on cryptobriefing.com. ETH is just, you know, to me, when it comes to creative projects, been killing it, whether it's DeFi or Sacramento Kings implementing something on the ETH blockchain. There's another one. It's called Sablier. It's spelled Sablier. But essentially, this is an Ethereum-based project that allows businesses to stream their payroll to employees constantly anywhere in the world. Now, the concept of streaming money at a constant rate was evidently tagged or created by Andreas Antonopoulos in 2017. So shout out Andreas there. But it's essentially the concept that you can deposit a certain amount of cash into a smart contract, and that smart contract will, you know, quote unquote, stream constantly every second the amount of money relative to the time set, the total time set to stream, and the total amount of money. That's right. So if you want to stream, you know, $60 for 60 days, you know, it's going to stream $1 a day, right? Keep the math simple there for you. But I think the thought is, that, or at least maybe what their kind of goal for execution is to allow crypto businesses, especially ETH businesses, to throw in an employee's entire year or maybe 2 years worth of payroll into these smart contracts, so that they know that regardless of what happens to the crypto market, I'm going to get paid, right? Because you can't go back in and adjust the amount that's going to be streamed. You can stream it in basically any ERC20 token, at least that's what they say at this point. So you could do stable coins, you could do technically wrapped BTC, you could obviously do ETH, you could do your own company tokens, right, if that was the case. So super interesting, another great example of smart, super creative smart contracts being deployed on ETH there.
It reminds me of what they're doing with Lightning. That's essentially what happens with Lightning when you set up that payment channel and you kind of have two people kind of signaling to that payment channel and it being there, but not able to remove it. And I think they do have kind of set up time limits over time with that Lightning network as well. So yeah, that's really cool. What if you could lock DAI and earn interest from Maker DAI? In a employer could use that as like a possible way to like entice someone, like, oh, you have this salary, but you also get the DAI rewards over time.
Yeah, that would be super interesting. I didn't even think about that.
Yeah,
but
it was talked a little bit about in that article. I mean, the DeFi components within these ETH projects are just forever growing. So yeah, I mean, you make whatever, 50,000, 100,000 a year, whatever it is, and at the same time, you're if you want to take the risk, you can get that interest on top too. So
I wonder if like how that affects the flexibility for that company too, because just to play devil advocate here. So, if in crypto markets, things change quickly and certain like needs for the employer change quickly, so if the person has been in this position fixing a certain problem in the market, but they're no longer needed because that sector of the market has died or slowed down so much, but they're still locked in to pay this person, So I think that also can backfire a little bit in that sense, given, how the industry is developing. If that person can't adapt to the new market conditions and to new responsibilities and so on, then, they're still going to be getting paid based on that smart contract.
Yeah, definitely a concern. I mean, it becomes like a sports contract at that point.
Yeah, we had that cool conversation about Spencer Dinwiddie, how getting all that money up front and, what is his motivation after just receiving all the money up front, and how does that work with the employer, right? Like it's certainly like people are incentivized by money. So if he gets all the money up front, what the hell does he have to do? What's his incentivization? So yeah, it's super interesting, man. For sure.
Definitely.
For sure.
Well, EOS was in the news a lot. I feel like Yahoo Finance had like a dozen different articles about this, but there's I don't know if it's FUD, is it not FUD, but it came out on Yahoo Finance and some other places that Voice is not going to be built on EOS. Is that right?
Yeah. From just seeing a brief overview of the article, because I kind of like looked into the Coindesk article when it actually launched, because I think Coindesk initially reported it, and then Yahoo Finance picked up on it. This has kind of been something that they messed up with Block One, June, like with their event that they did back in June, where they initially hyped up Voice and they did this product launch, or at least an announcement launch back in June of 2019. The word for word, Dan said that the Voice was going to launch on the public blockchain. Like they was going to utilize the main chain. Now that could still be possible. Again, like this is a February launch. Like so there's multiple reasons why you could quote unquote say this is FUD. This testnet is going to be a testnet, and it doesn't need to be on the main chain. It's not launching live. So technically, if you want to get like word for word with it, this is not Voice going live. This is Voice beta on testnet going live. So word for word, what he said back in Block 1 June could still be true maybe down the line. Maybe it takes a year for the actual voice to launch. And when that happens, they do have the technology. Maybe it's EOS 3.0 at that point, and they have this decentralization figured out. They have all this CPU and RAM issues figured out, and it can launch on the main chain. But I think the more probability in what they've told the community is that it doesn't need to launch on the main chain. It can launch on a variation of Wax and Warbly and EOS main chain and all these other different chains, Links. Like, it can be pushed to all of these separate side chains. And while I don't understand the technicals around that, I think that in order to achieve the scalability to have how many users they want, it's gonna be something that's kind of dispersed over many chains. At least that's what I've gotten. So
yeah, no, I mean, obviously you like EOS, right? Big EOS proponent. Team, I'm going to kick it over to you here. So if Q's perspective here is the bullish perspective, what are some of the issues, obviously, with Voice not launching on EOS for EOS in general? What, take me through the bullish bearish devil's advocate.
Yeah, so I think in general, a lot of traders and investors have been looking at Voice on EOS specifically to pop the price, right? So for that, because that price has been struggling for a while, so they're looking for that platform, right, to really deliver on their promises and be on EOS, and that should be reflected in the price of the network. But if that's not the case, then that's creating this risk, right? Firstly, you have to deal with the risk of a launch of Voice already, right? So there's uncertainty there. But now you have thrown in this that it might not be even on EOS. Like, that's bringing in more variables for people to calculate the risk when trying to get into EOS as a token to hold it for products that they're promising to come out, like Voice. So it's creating more uncertainty for them in general. I think I've talked about it on the desk is that recent movement in EOS could be due to the fact that people are hyping up for the upcoming beta for Voice and see how that goes. But we've also seen in traditional markets, and this happens over and over again. It also happens in crypto where you buy the rumor, sell the news situation as well. So this, I think, overall, just in general, with that piece of news coming out, I think that just brings more uncertainty to EOS and more variables in terms of calculating risk when you consider to invest in the token itself.
I think that's fair. I mean, obviously, a lot of folks who are within EOS, have been super bullish on this new DApp, right? I think an additional thing to remember too, which is not always the most fun to remember, but that we're still very much in a time where, as I've written about before, crypto is pretty much dominated by speculation.
Yeah.
Right. Fundamentals really do not drive price. I would even say that the majority of the EOS pump has come, just as other alts have pumped because we've seen Bitcoin pump and we've seen people maybe move some Bitcoin profits to alts now that they're alive a little bit. So, I think EOS is not alone in this sense. I think, 2020 is going to be a very, very interesting year from a fundamental standpoint for a lot of these layer one protocols, especially the proof of stake ones. We talked a little bit earlier in the podcast about how so many of these proof of stake networks have nodes that are dominated by a few people. I saw a tweet the other day that was basically like, the bear in the room, or the whatever that what's that metaphor? Is it the
elephant?
The
elephant in the room. Yeah, thank you. It's Monday.
The bear in the room is Dima, clearly.
The elephant in the room is that all of these proof of stake networks, the majority of the nodes are run by the team, right? And they're just kind of this fake thing. But go ahead. My overall point being is that no one still knows where value will be captured in the essential tech stack within crypto, right? And now you have EOS as just another example of somebody who's trying to launch an application on this layer one protocol, but has essentially, it seems at this point, decided it won't be possible for whatever reason, resource management or scalability. So So, in what world will some sort of valuation method, very clearly and easily show that when voice doesn't launch on EOS, it will pump the EOS price.
Right.
It makes less and less sense now. And so many of these layer one protocols are starting to run into this problem.
Yeah, absolutely.
Yeah, I love, how we have these discussions, and more it's coming up that we talked about this in an interview a month ago or 2 months ago, or we had, it's really funny that you talked about these side chains, being, spun up. They called Douglas Horn. They said he runs Telos in this Yahoo article. So it's like you have all these other issues, but no. The point that I was trying to make was that Nick White. We had him on the podcast probably like 2 months ago. He was like one of the second or third guests on Layer One, and he was talking about how
from Harmony.
Yeah, from Harmony.one. They're a proof of stake protocol network. They're going from a decentralized state or a centralized state to a more decentralized state. And he made it an emphasis that's what's needed with the tech that is out there right now, right? If you're going to make a user friendly app that is gaining mass adoption, we do not have the tech to do that right now. I think the people that are really upset are just the people that have always been upset when anything ever comes out. But I was going to say this, but cover your ears or cover your children's ears. But this is the shit I was talking about when I said I wish voice didn't come out for another 8 months, because this is the Yahoo article talking about voice. It's like, man, like we don't need this. Like Block One's putting out a bunch of stuff. Like they're doing a great job. The tech is there, but we got to deal with this voice stuff now. And the value for voice was always going to be that it would flow back into the EOS chain. And I still think that can happen. There's talk about, and there's still talk, this has been since the beginning, like a user would get an EOS account with their voice account. So it's not necessarily like mandatory, but maybe, maybe 1% of users that sign up for voice actually flow back into Dice or flow back into Karma or flow back into all of these dApps within the EOS.io ecosystem. So EOS is, and I'll wrap this up, but EOS has always dealt with Dan, like Dan's one of the main reasons why EOS has been so successful, but he's also the main reason why they have all these issues. Like he made assumptions about governance, and then it was found out to, this is not the case. He made assumptions about the EOSI blockchain. I mean, the quote from the article takes his quote saying Block One will launch on the voice platform, or Block One will launch the voice platform on the EOS public blockchain. Like that was from Block One June. Like,
right.
It's just Dan getting in front of himself. So
yeah, for sure.
Yeah. So yeah, I'm super passionate about it. I have to, step back and view it with optimism, or not optimistic. What's the word I'm looking for?
Objectivity.
Yeah, some objectivity there. So
yeah. Well, let me ask you guys this, right? This is a final question I'll pose here on the topic, because we talked a little bit about kind of valuations and decentralization and all these various important topics within crypto, but specifically in this case, where you have, let's say, for example, bearish news coming out, but the price pumps. Like I said, it's generally due to the fact that Bitcoin runs the game, and when Bitcoin pumps, everything else pumps, especially in what are considered more bullish conditions, more of a bull market. So how long do you think it takes until we get to a point where that is no longer the case, where fundamentals actually, over the majority of the time, drive price, and you don't end up with, and I'm not including EOS here, but there are so many of these kind of zombie networks, right? Where nothing's happening. There's no new investment. You're really not seeing a ton of new users flow in to these altcoins, but still over, this bullish cycle with Bitcoin, they pump 100, 200, 1,000, 2,000%. When is that no longer the case?
Yeah. That's a really, really good question. I had something in mind. Q, did you have something to throw in?
I think we touched on this earlier, where it's gonna, be a while before we can, really attract, or I don't mean attract, but compare the valuation to what's actually happening in real life. Yeah. It just seems too manipulated. It seems too manipulated to me. It seems too manipulated.
So right now, yeah, Brian, of what you said, you made me remember. So you were talking about like the formulas, right? That people are searching for to use to somehow evaluate these tokens, right? But there's no such thing yet, because for various reasons that we already talked about. So right now it's run by speculators, and until that shifts, where we start getting actually meaningful predictions, meaningful formulas that can use fundamental things, like let's say voice comes out, they're going to have X amount of users projected, they're going to have X amount of volume that's going to be going through that platform, which is going to translate into EOS being priced at the following price, in the future. Then, in that case, in that case, that's when the fundamental news are going to start affecting it really hard. But we still saturated, with speculators that don't really know how to value these assets, and they're just basing off the just market trends in terms of BTC going higher. All right, that means it's going to trickle down to alts. Usually alts pop higher, and everybody jumps on this bandwagon.
Yeah, and it's fair to clarify too, and I think that I'm not saying obviously that speculation is bad, right? I think that speculation drives interest, and hopefully that interest turns into adoption of these, consumer focused products. But
it drives liquidity.
Liquidity. Yeah. Everybody wants, the orange coin price to go higher, right, at the end of the day. But as we look kind of forward into the future, I guess really when I'm talking about this, kind of pure focus on speculation, I'm talking about the fact that, let's say in the traditional market, right? Boeing has obviously been going through all sorts of issues because the 757 Max or whatever it is plane is just a complete disaster, right? So this bad news comes out, right? Obviously consumers interact with the planes via these other companies, right? So if you're not selling the planes, if the consumer kind of facing product or application or whatever it is for that equity is no longer working, right? If it's no longer doing what it's supposed to do to drive revenues or help grow the company, right? Whatever the case may be, you see that stock dump, right? There are still instances in the traditional market, as we've seen really for the last few years, where maybe, say for example, good news doesn't come out, but the stock price still jumps, right? So you have this happening in the traditional markets. I think the main difference exists when you have bad news come out for applications on layer one, crypto protocols, but then the price doesn't necessarily dump.
Yeah.
So it's kind of the same in, on one side of the spectrum, but different as well. So
same, but different.
Yeah. It's a hell of a conversation, and you can kind of talk yourself into like the biggest black hole of all time with this. You can, you can really go back and forth, and who knows who's right.
Just last comment I want to say on that before we move on is just really people are having a hard time figuring out the intrinsic value, compared to the stock market, where you can figure out the intrinsic value for those companies that, like Boeing, for example, if they have issues, that effectively is reflected in price. In crypto, intrinsic value, good luck finding that.
Yeah.
So
I wonder how much of Block One's stash of $4 billion plays into the stability of the price, and that could be, that's cash on hand. So I don't know.
Newsflash, they cashed out at $20.
I love the little like bullish comment that
they're
like, oh, don't forget they got $4 billion.
But the $4 billion.
Fair. We had a ton of comments, man. This is gonna be a hell of a ride here. So strap in. First of all, Rob did say when Amish use Bitcoin, we made it. So he was talking about the Amish there. Barry hopped into the chat. Barry, we were talking about you earlier. He's got a couple hard-hitting ones here. He says, it took me 2 days of digging out here, but I think I finally found Peter Schiff's BTC in my driveway. Jason was talking while we were talking about EOS. He says, I don't want my EOS anymore. I think he was joking. Scott says, I'm still out here throwing a hashtag go EOS every chance I get. 10 years in the future mindset. Jason continues to say, I've got fear, uncertainty, and doubt. To me, if Voice is just going to build on a sidechain, I'm going to do the same thing with Wax. Let's see. Barry says, who's the guy that sounds like Mike but has no hat? What kind of sorcery is going on here?
Barry's coming hot.
He's coming
these
hot.
jokes, my goodness.
And here's the last one from Barry. He says, yeah, Boeing is really ... crashing these days. So
yeah,
yikes.
I saw a tweet from our conspiracy friends at Zero Hedge that said supposedly Boeing is going to banks asking for a $10 billion loan. So last time this happened with Boeing, there was a giant meme where the stock price dumped by some crazy percentage, and then all of a sudden just like pumped back up to where it was, and they used the Boeing as in Boing for the stock price, because they're just such a dominant factor when it comes to airplanes and supplying all of that for all the airline trouble that happens. But yeah.
Gotcha. Jason goes to say, we need speculators to get bored and move on. Typical dev. Also, Mudcrab says, voice doesn't need to be built on EOS. The only thing that needs to be on EOS is the voice token, as DBoS security comes from the system token value. People thinking every post like shared needs to be stored on chain forever are being silly at best. So
it's a fair point.
Yeah. So that's a hell of a comment, guys. We appreciate everything you guys are doing, man. This is a good community here that we have. We hope to, kind of, it's a little bit different, and we can talk about this on another episode because we're getting into the hour 30 mark here. But I love how we're able to take in multiple different chains and networks. I think that's something that's lost on a lot of podcasts that are super hyper focused on maybe one chain or even one side chain. I think we have strength in numbers, so vis in numerous or something like that is I probably totally butchered that, but if somebody from ETH can tell us something that we don't know because we're talking about EOS or Bitcoin, that's all the better. I don't think being in an echo chamber is good, but
and it might feel like we're always talking about Binance, or we're always talking about EOS, or always talking about ETH, right? I mean, we try to cover as many of the major cryptocurrencies as we can. I mean, I have a Google alert set up, right? When news comes out on pretty much the top, some of the major 50 by market cap cryptocurrencies. There's just not a lot out there, to be honest. So if there's a ton of news happening with a protocol out there, or a project out there that you feel like we should be covering, definitely let us know. It's impossible to keep up with all the news in crypto. So
go ahead, Dima.
No, I was going to just add that it's really cool to enjoy, doing this live, to interact with the guys and cover some of the news or things and perspectives that they throw at us, in real time. So yeah, definitely.
Jason wants to know how much Hex we each own. But
I can't stand that guy.
All right, we'll move on to Binance here. The last thing I'll probably say on that is I'm super interested in projects like DApp. That are like applications within or layer 2s within EOS and things like that. There's no freaking liquidity. Like, even if I wanted to get into DApp, I would either drive the price up 20% trying to scale in, or I just never am able to get in, unless I find somebody OTC, and that rarely happens. It's until the liquidity point that you made, there's no option. DApp is one of the coolest projects within EOS, and there's no option to get in. So it's crazy, but yeah.
Yep. Yeah. And just so you know, when Jason brought up the Hex there and I said, I hate the guy, Jason, I don't hate you. I hate you. I just want to clarify. Don't leave the stream here. But yeah, man, I think we can probably move on from EOS here now to, some additional news on Binance here. Deem, what's going on?
So speaking of speculators, Jason, you want to listen to this one. We have Binance that's delivering more products when it comes to perpetual swaps, meaning that derivative where you can trade 75x. They just added ETC USDT and Link USDT to their platform. So now you can basically trade Ethereum Classic at 75x. If you watch the price, I was actually shocked myself. I was covering this on Dimitri's desk too, and I was like, well, wait a minute, ATC is up how much? Because basically when that article came out, when the announcement came out that it was it was released on their platform, we went over 100% in price up. So
this is on Ethereum Classic.
Yeah, Ethereum
Wow.
Classic. Yeah, ETC went over 100% in just a couple days. 120% looks like it peaked there, and we're trading. So we went above $10, which is quite huge. But yeah, we're at $8 right now. But these things, like you could see that as like them coming out with these perpetual contracts and seeing that being reflected in the spot market is something that I've been talking about. This is pretty violent reaction to it. But my first thought is that when we see more of these derivatives contracts with high leverage, you have to keep in mind the security of the platform in terms of balancing the books when certain things happen. If the price retraces a significant amount, there's not enough buyers and sellers. How are they going to pay out those that are shorted? There's a really good report that Arthur Hayes came out with for BitMEX where he talked about specifically in options. In options, he was talking about how that sector is heating up, and the reason why BitMEX is not getting into it right now is because for reasons where when we put out a product like a perpetual swap on our platform, we make sure that we can pay out our traders if the price goes to 0 on that token, or it goes to 1 million on that token in a single tick or whatnot, right? So I think it's very important to keep in mind that some of these products, I would be interested to actually know how they stress test their products, right? So during huge market volatility and activity, what's the stress test showing? How can your platform really deliver on the payouts if that's occurring in the market? So he did mention that so you see these more news coming out for more perpetual swaps coming out. Just keep that in mind.
Yep.
Even though it does provide liquidity and tailoring to speculation with more leverage, options is delivering so much leverage in crypto right now. I mean, more than perpetual swaps that we have in 75x. So when you have more of that stuff coming out, keep in mind that this can also be a negative thing in case of a black swan event or something like that. So
yeah, and that's a fantastic point, one that I was going to make as well. And just to break that down further, right? So I think that part of the reason we're seeing these pumps when altcoins are being listed as basically on futures markets, whether it's Binance or others, but really it's primarily been Binance that has kind of lit the fuse and started the pump for these various altcoins. I think that's starting to become a self-fulfilling prophecy in the same way that like the Coinbase listings used to be. Mm-hmm. That tends to be the case because you have so many people who are now via Binance being introduced to futures and this 75x leverage where mm-hmm. they no longer have to hold an altcoin all the way through a market cycle, mm-hmm. right? They can make 750% going 75x on a 10% move, basically, if that math is correct. So you have this speculative interest that's happening perhaps with new or experienced users, and it's becoming this self-fulfilling prophecy where in the spot markets, like you said, everybody's buying up ETC mm-hmm. or Link, and then what you have is you have that reflected in the futures markets, and everybody kind of wins until it dumps. But the main point I wanted to bring up was along the lines of what you were talking about with Arthur Hayes and mm-hmm. BitMEX. And if you want to check out that article, I think it's on BitMEX Research about why BitMEX won't be doing options.
If I can find it. I'll drop it in chat.
Yeah, he has a great podcast. I think it's from like April 2019 on the Venture Coindesk podcast, where he really talks a lot about kind of that safety of user funds when it comes to any trade that can be liquidated, essentially, whether mm-hmm. it's futures or options or whatnot. So be very careful. I can totally see what you're saying, Dima, where if some brand new altcoin, certainly not going to be like an Ethereum Classic or a Chainlink where volumes are generally high, but let's say Binance continues down this road, right? And it's an altcoin with only a few $100,000 or a few $1 million in spot volume, and it's listed on futures because Binance is trying to drive those fees. They're trying to, really, really push it when it comes to these futures. Well, if the volumes and the liquidity aren't there, and you start to have liquidations happening, because that volume and liquidity isn't there and volatility is high, you run into this, like you said, this negative scenario where being listed on Binance futures actually could drastically hurt the project.
Yeah. And I think just real quick to add a little bit more, I know this is turning into Dimitri's desk now, but
I always knew you'd do it. Slowly but surely.
The thing you said in terms of spot market, trickling down to trickling up to the futures market, it's actually also works the opposite way as well. So having the futures market impact the spot market, because you have basically arbitrage that happens between the spot and futures. You have these quick bots that go in and arb that, which, move in the futures market can actually be shown in the spot market, which is, I think that's what happened with the ETC Ethereum Classic there.
Yeah. Or you just have speculators like myself when ETH was like 120 and I was like, I don't want to get liquidated, let me go buy some spot ETH and move it to the futures exchange.
More margin.
So, yeah, exactly. More margin always. So Binance continues to list more futures products.
Absolutely. Before we get to this last one, Mike, let me hit the comments really quick because we do have a bunch. Barry says he's got a tinfoil hat for Christmas, so strap in, boys. We had 1-2 in the chat. He says, if you're selling EOS, I'll buy them from you. Hassan was talking about, and I guess he retracted his message, so sorry we didn't get to it in time, Hassan, but he was talking about how SV flipped EOS, I think on CoinMarketCap, if I'm not mistaken. We had a couple more, Chad. I think Barry doxed himself as a Freemason. The Binance logo is a Freemason logo. I did some research one night last year. Plus, I was a Mason before I renounced it when I found out the satanic ties. Nicholas is in the chat for the first time. Welcome, Nicholas. Thanks for stopping by. We did already talk about Decentraland. If you want to come back after the episode, come back like 30 minutes after the episode's posted. I'll have the description with the timestamps for you. So when we talk about ETH, we talk about Decentraland.
Yeah, for sure.
So let's wrap.
Definitely, man. It's been a hell of an episode. Final point here. So for those who don't know, basically an offshoot of a veteran from JP Morgan, or project offshoot from a veteran from JP Morgan, has launched the public component of their blockchain. That blockchain is called Cadena. If you guys are kind of wondering how we stay up to date with this, obviously there's a ton of new projects being listed, but one of the kind of tricks in staying up to date with this that I've found is that there's a great website, a great service in the crypto industry called Staked. We actually had Tim Ogilvy on, the CEO of Staked, but if you go to staked.us, believe it or not, they are a great resource because they're one of the largest staking pools in crypto. And they will show you ahead of time, like up to a year ahead of time, what projects they're going to be a staking pool on. So you end up with projects like Cadena, who are listed on Staked like 6 months ago, right? When there hasn't really been any press on it. And you can kind of start to do that research beforehand, assuming you're somebody who wants to do that. So anyway, this crypto startup, basically the public component of their blockchain launched. I think a lot of people are bullish on it because, like I said, you have that veteran from JP Morgan. Basically, he was like one of the leaders in their kind of quote unquote blockchain center. He has launched this. So Cadena, we've reached out to him. We'd love to have him on the podcast, but basically they're going to have a public chain and a more private chain with a focus on kind of this like hybrid blockchain model that really aims for enterprise adoption or kind of this more like enterprise blockchain setup. So, obviously it's brand new, right? The jury's out on whether or not it'll be successful. I know they're saying here that they can do about 750 transactions per second, which is nothing super crazy.
Come on.
Yeah, nothing super crazy, but obviously TPS isn't the full story. So if you want to take a look, Coindesk has an article on it, and obviously we'll link it. But another one of those, another one of many kind of new hybrid proof of stake blockchains or hybrid blockchain models that are coming out and hitting the market.
Are they doing an ICO or what?
They are, yeah. They raised a decent amount of money, and I don't know if they're calling it an ICO, but they're doing some sort of fundraiser. I don't know if it's coin lists, where it's more of like an accredited investor setup or
Nice.
or what it is. But yeah, there's supposed to be a more public fundraiser for the public blockchain. I mean, my biggest thing with these like hybrid private public blockchains is that if your focus is on enterprise, and you're really maybe security tokens or you're looking to go to banks or something and cut down on their costs, right? Like, why do you need the public blockchain?
Yeah.
It's so.
What do you mean? Why do you need it? To raise funds.
Well, there you go. There's your answer. Thanks, and we're out.
Dima, what round is French ICO in right now? Did you get in?
How did you know? I just pulled it up. You must be looking at my screen.
For those who don't know, this is basically a giant ICO troll that we've been running on.
So
episodes.
It's crazy because the news came out saying that this was the first ICO that was approved by French government. So actually, the token sale begins in 40 days. So you guys didn't miss anything. You still have a chance. In 40 days, they're starting their sale. It's apparently, I don't know, French approved ICO.
Yeah. I can't wait in like 2 years when the French version of the SEC comes out and it's like, you guys said this and it's not correct. I'll give us $40 million.
Yeah, exactly.
But who knows? Maybe it's super legit. We're obviously just talking shit here.
Man, honestly, dude, what an episode that we just had too. So we appreciate everybody. I think we at the top we had about 25 concurrent viewers. So we appreciate you guys that are still here. We're a minute and 45 or an hour and 45 minutes into the episode. So man, that was that was fun. I love these, man. I think Hassan, you are a welcome. I'll talk on his comments really quick, but he's a welcome addition to our community here because he's talking about being a chain agnostic, and he gave me some shit for having a bag on EOS. I think he was talking about that no one's talking about the BSV flipping Binance, given that they delisted BSV. Do you guys remember when Binance delisted BSV?
Yeah, it was a huge news because CC came out and basically saying,
all right.
Yeah, it's when CC came out. I was like, why am I gonna have this like Satoshi token? Basically, the guy who's claiming to be Satoshi token on my platform, and that was a huge deal where he just delisted it.
Yeah. I got a lot of shit for not remembering that because
I was reading the chat.
But...
Yeah, I was like, oof.
Okay.
Ooh.
Yeah, it's. I mean, I don't know. The whole BSV thing is tough because it was basically just a insider scheme to pump that market cap. But yeah, man, it's been a great episode. Shout out to Q, who was up early driving like 7 or 8 hours back to good old Virginia, and for a Monday where we were kind of hurting, I think we pulled it together. So we hope you guys enjoyed it.
Yeah. Go ahead, Dima.
Firm handshakes to all the new people that we're adding to our family of Layer 1. Keep it going.
Yeah, guys, please join the Telegram group too, because the conversations we're having here in the YouTube chat that can easily happen over Telegram chat as well. But yeah, I think you touched on it, Mike. We started kind of slow there, kind of not skittish, but kind of felt bad a little bit. So I'm glad we pulled it together.
Definitely. We'll see you guys next time.